you think about a bank, what do you think of? Likely the first place that comes to mind is a place to store money. Many children's first memories of the word bank is of piggy bank, where they could stash the loose coins that they find on the ground. Trust me, we have a 4-year-old, we see it all the time. And as an adult, the more I learn about banks and our banking system, though, the angrier I get about them. Yet there's a very important lesson we can learn from banking institutions about whether we should focus on making or keeping money. Both, either, I don't know.
Hi, and welcome to the Wealth Wisdom Financial Podcast. We believe when conventional financial thinking doesn't get you where you want to go, you need wealth wisdom. Please hit that subscribe button. And if you're watching on YouTube, we'd love for you to like this video and give us a comment below, even if it's just to say hi. Now, have you ever heard of Andrew Lewis?
Nope.
How about Richard Serra and Carlotta Faye Schoolman?
Neither.
You may be more familiar with the concept that these people have brought into the world. Richard and Carlotta way back in 1973 and Andrew in 2010. Andrew typed it most succinctly. If you're not paying for it, you're not the customer, you're the product being sold. Richard and Carlotta applied it to television. Andrew is talking more about social media, online search maybe, but we've never seen it applied to banks. What, banks? How are banks using us as their products?
Now think about it. Most banks offer no fee checking and savings accounts. Sure, maybe you need to set up an auto deposit or keep a minimum balance there, but that's not all. Most credit cards don't have an annual fee anymore either. Even some investing accounts are moving towards no upfront fees. Sounds great, right?
Well, you ready for something that's just bananas? The Federal Reserve keeps track of what they call financial services furnished without payment, or in other words, the money made from providing free financial services. It's gone from less than $1 billion per year in 1933 to over $900 billion per year every year starting in 2018. That means banks are going to make $900,000 this year off of free financial services.
So why do banks offer free services? Here are just some ideas that maybe you should think about. There's junk fees for overdrafts, ATM fees, late fees. If they give you a free service, many are unlikely to avoid fees when they use the services in non-free ways. They also have the ability to sell the data of their customers. Yes, your banks can sell your information unless you explicitly ask them not to. Then there's credit card transaction fees. Every time you use your credit at another business, banks are increasingly making money off every single business in the world. Trust me, we know, we ran a business, we saw the fees going out. Finally, there's the difference between the interest they pay depositors and the interest they charge someone else to use their depositors' money. I mean, like really, this is the most famous one, and you probably have thought about that before. Now, we'll put a link in the show notes to an episode we did about 2 years ago, why we don't save our money in a savings account and where we save instead, because we've thought about this a lot.
Now, banks are really good at making money. Duh, no brainer. Does that mean you should learn to make more money like banks make more money? Are you likely to be able to charge high fees, collect enough data about a large enough group of people that you can sell it, get other businesses to give you a portion of every single transaction, or get enough people to give you their money and enough other people to borrow the other people's money from you? Perhaps one of those might work for you, but it'll likely be very, very hard to get that going and make enough from it.
But if we're not careful, the banks will take the majority of what we make, right? Even if you're savvy enough to avoid overdraft fees and stay out of debt, there's the problem of low interest rates on bank accounts, right? So there's that. There's also the problem of losing the opportunity of what that money could grow into every time you take it out of the banks to use it. And if you lower it below, sometimes they charge you a fee because you're under 50,000.
Well, that's why we can't just focus on making money. We have to decide how we will keep it too. Where your money lives makes it do different things. That's one of our core principles. Where your money lives makes it do different things. And if your money lives in a bank, it makes the banker way more money than it does you.
Now, here's the thing. Most people never hear. A bank isn't the only place to keep your wealth. Investment firms aren't either. In true historic wealth wisdom fashion, we'll remind you that banks haven't always existed, contrary to popular belief. Temples served as the earliest banks for grain and such to protect surplus from enemies. Banks evolved as money evolved and became more widely used. Today, it's hard to participate in the world without a bank account, though, right? But that doesn't mean banks have to be your only financial institution.
In fact, we know of a fantastic way to reclaim the banking function in your life and a business, and thereby reclaim the difference between the interest earned and the interest paid, just with a different name. We believe it's one of the best ways to keep more of what you earn, not just from the banks, but also from the Internal Revenue Service. One way it's referred to is as doing what the banks do, not what the banks tell you to do. We could go all into that of where the bank's actually storing their money. Hint, it's not in a bank. We've actually got a whole playlist dedicated to the concept. We'll link to it in the show notes.
Wait, so are we saying that one should focus only on keeping more money and not on making more money? It's not what we said. That seems absurd. The more you make, the more you can keep, right? And you can't keep anything if you don't make anything.
Well, so the main point of the conversation is this. If you don't figure out how to keep your money, it won't matter how much more you make. And it might just be the fact that once you figure out how to keep money, that same lesson is going to teach you how to make more of it as well.
So do you want to make more money? So what if you shifted your focus to keeping more money first? And what if that shift in focus ultimately helped you make more money too? They say it takes money to make money. If you have more money than you kept, do you think you could use it to make more money? Even more, do you think what you learn by learning to keep more money would be lessons that help you make more money too? Again, it's mind-blowing if you think about it.
So are you ready to discover more about how to keep more of your money and get it working for you rather than for the bankers? We specialize in helping Americans keep more money so that long-term, they can also make more too. We'd love to see how we could be of service along your financial journey. You can take the first step with us and schedule a call at wealthwisdomfp.com. Wealth Wisdom, F as in financial, P as in partners.com.
And thanks for joining us. Don't forget, hit that subscribe button and leave a comment below. We'd love to hear from you. And live long and profit. The topics presented in this podcast are for general information only and not for the purpose of providing legal, accounting, or investment advice. On such matters, please consult a professional who knows your specific situation.